You all have probably heard the old adage that the beatings will continue until morale improves. The beatings will continue until morale improves. The beatings I'm referring to today are the beatings being taken right now by the gold and silver short positions. Gold just closed. Metals market just closed about 20 minutes ago. Gold closed up $66 an ounce today, $4,209 troy ounce. And silver closed up $1.54 per ounce, closed at $53.09 an ounce, right? Both all-time highs again. And of course, there's a lot of out now, economists or whatever, analysts saying that, well, gold's and silver are in a bubble and, it's going to pop and there's going to be a big downturn. So that's the topic for today, because I have a different perspective on it and I want to get your thoughts and your perspective. And what gave me the idea for today's show, frankly, was, if you guys ever watch Maneko64, he has a YouTube channel, been out for over a decade. I've watched him, and he's over in the UK, so he puts his show out in the morning. Anyway, I caught his show this morning, and he had mentioned this publication, the crackup boom that was raised or published about by von Mises. And I started digging a little bit, and I pulled up a very interesting article which fed right into my show from yesterday. And the title of the article is from something called Equity Armor Investments. Never heard of it. Not the point. I'll share the content with you. I think you'll find, hopefully, as I did, that it's extremely telling of what's going on right now. But look at yesterday, Jerome Powell came out and said, this is basically we're in a very difficult balancing act here. So this story out of Equity Armor Investments was released 1 month ago. That's why I thought it was extremely telling to share with you today, 30 days later. And let's see where we've come from. But the story that I'm going to refer to today, again, it was published September 15th. And here's what it says. Here's the title of the story. And look at the little artwork below it. Exactly to my point of the show from yesterday and what Jerome Powell himself said in his comments yesterday, October 14th, right? So the title is The Fed's Dilemma, Why Rate Cuts Could Trigger a Crack Up Boom. Okay, we'll get into that, what that means in a second. So just real briefly, the markets, the Dow closed down a little bit, but earlier in the day it was up 400 points, okay, because the bank earnings were coming out really strong, and this was set all the markets up. NASDAQ and the S&P did close up today in the green, but the Dow gave back 400 points and closed in the red. So we had Scott Bessent out, more job owning about China and the trade war. So, do you guys think for a quick second that bank earnings, when, the JP Morgans, the B of A's, the Wells Fargos, when they come out with strong earnings, that is any indication of the strength of the U.S. economy? That's a question. I think the answer from my perspective is absolutely not. You understand, number one, they have lots of components that go into their earnings. Not the least of which is the interest they're getting from all the debt slaves in this country. They're carrying around maxed out credit cards at 25, 30% interest. They also have, of course, investment banking arms. So they're dealing with, with the wealthiest, people, in the world. They're also paying them fees. So don't think for a second that just because B of A says, hey, earnings are great, that does not translate into the economy is great. It might actually be the opposite, okay? So that was what got the markets, from my perspective, juiced this morning early, and then the comments from Scott Bessent, I think, kind of threw some cold water on the flames. So let me jump in to this story about the Fed's dilemma as we see record all-time high after record all-time high out of gold and silver. Okay, and I want to get your guys' thoughts and comments. Do you think it's going to reverse? Do you think that it's in a bubble and it's going to pop? Before I jump into today's story, as I always humbly ask, please hit that subscribe button if you're not subscribed to the channel so we can keep growing the community. I do really appreciate it very much. So, says, again, this is from 1 month ago. Joe Tigay, portfolio manager of the Rational Equity Armor Fund, okay, and a former VIX pit options market trader, okay, talks about what a crack-up boom is, what leads to it, and what ends up happening. He says, picture this: the crack-up boom happens when everyone tries to get out of a losing currency and get into hard assets like gold, real estate, and other real things. Think of musical chairs where the prize isn't just a seat, but something with real, lasting value. The music plays, that's the currency losing value, and everyone scrambles. The crack-up boom is the frenzy as the music speeds up and people get more frantic to grab a prize. They know that when the music stops, many people will hold nothing but paper money, and that's worth less and less. And he says, as the Federal Reserve prepares to cut interest rates, and that was again last month's rate cut. That was the first rate cut in quite a while. He says we face a critical moment, and now I would argue that it's even more critical, and that's why you're seeing metals literally go ballistic. The data tells us two different stories. Jobs are disappearing fast, but prices keep rising. The mismatch creates the perfect setup for what Austrian economists warn about: market conditions where investors move away from cash and into hard assets. They see central banks destroying the value of their money. It isn't just about America's central banks. He says banks worldwide face the same impossible choice. And he lays out some of the statistics from August. Okay, that was the month before he released this story or this article. And what he says is jobs are disappearing fast. Showed the August jobs report numbers, okay, and only 22,000 new jobs were created in August. Unemployment had jumped to 4.3%, and the initial jobless claims had hit 263,000, okay, reaching four-year highs. So what do we have this month? Leading into another Fed meeting in about 2 weeks with another expected a rate cut by the Fed, pretty much a done deal from hearing from Powell yesterday. So what do we have this month? Well, this month, because of the shutdown, we don't have the jobs numbers, okay, published. And so we don't have the unemployment rate published, okay? So the numbers are, kind of in the dark at this point. The unemployment claims so far, week ending September 6th, 263,000. Week ending September 13th, 231,000, and the week ending September 20th, 218,000, okay? So we have a continued, as Powell again admitted yesterday, weaken in the job market. That's why he says we're having to come in and save what is a collapsing job market, and it may be at the expense of inflation rising. So once again, this is the balancing act that the Fed had admitted yesterday. They're trying to walk this tightrope, okay? But what happens when, and don't think for a second that, that investors, that central banks around the world, right, are not all watching what's going on. And so now we're back to this idea of a crack-up boom, and when is it going to happen, and what does it mean, okay? So it says, this creates what the Austrian economists warn about when they discuss crack-up boom. When central banks must choose, which the Fed's having to do right now, between supporting markets and stopping inflation, history shows they usually choose, okay, to support the markets, and inflation follows. In this case, trying to, let's say, save, if you will, the job market, i.e. support the markets. The gradual erosion. He says this isn't about predicting a bubble burst or a sudden crash higher in asset prices. Instead, we're seeing something more dangerous, the steady, relentless decline in cash's purchasing power that's set to speed up, and he says this week. Okay, that was a month ago. Okay, look at what metals have done, gold and silver, since the first rate cut. We're about to get the second rate cut. The crackup boom doesn't happen overnight with dramatic market moves. Okay, it's a gradual process where the investors slowly but surely recognize that holding cash is a losing game. We're not looking for fireworks. We're watching the slow motion destruction of money's value. Okay, and that goes to the description for today, which is what we're witnessing is an entire rebalancing from my perspective, okay, layperson perspective, a rebalancing of the financial and monetary system, okay, and a destruction, if you will, of the status quo that's been in place since basically 1971 when Nixon took or depegged, right, the dollar from gold, right? Took us off the gold standard, right? It was supposed to be temporary, and it became permanent. Okay, so the status quo has been. Now, yes, we've had run-ups in metals at various times, in the past, but again, we didn't have the levels of debt that we have now. Okay, and everything else that's built up and accumulated in the system. So we're in uncharted territory. All right. The coming flight to hard assets. As rate cuts become reality and this gradual erosion continues, we'll likely see investors increasingly abandon cash and bonds, okay, for other real assets. The logic is simple. If the Fed cuts while inflation runs above target, which they are, and he said again yesterday they're going to continue to, okay, real interest rates turn deeply negative. In this environment, holding cash becomes a guaranteed wealth destroyer. Not through dramatic crash, but through the steady grind, purchasing power loss, okay? So understand that this is not from my perspective, gold and silver are not going up massive amounts every single day, day after day right now because, Joe Q six-pack is down buying a coin at the coin shop. You're not seeing lines at coin shops to buy because number one, retail is not driving this anymore. It's a total shift in the whole system. This is institutional, big money. This is foreign central banks. They're driving this. And why would anybody say it has to come to an end and pop? Why would they reverse course? Are we all of a sudden going to have a change in the Fed stance? We're going to have everyone rush back into the dollar? Of course not, right? Confidence is being destroyed every second, all right? So this is not people, if anybody's going to their coin shop right now, it's the broke consumers that are selling their jewelry off or their gold chain or the guy taking in his grandfather's silver coin collection that he's had and selling that off. That's what it is, right? That's why you see people coming out and saying, look at the coin shops are stacked. There's no demand. Well, because retail is not driving this run up right now, okay? This parabolic run. So I just want to, I wanted to share that with you because that was 1 month ago today before the Fed made their first cut. And now we're exactly a month later about to embark on the second rate cut, which could be the second in a line of many more to come. So, for those out there saying that, this thing's got, a few more weeks to run, then it's going to reverse. I just wonder kind of, what they're looking at, where they're coming from. Yeah, it's correct. Nothing goes up in a straight line. There are always, ebbs and flows. But the trajectory of this thing, again, not trading advice, not financial advice, from my perspective, is, you've got Jamie Dimon out today. Okay, you've got these big hedge fund guys, big heads of banks saying, look at $10,000 gold is definitely not out of the question now and probably likely in the coming few years. Okay, so this is where it's heading. All right. I'd love to get your guys' thoughts and comments. As I always ask, if you enjoy the content, please leave me a like on the video, subscribe to the channel for me. And went a little long today, but I wanted to share that with you. Okay, very insightful story from exactly 30 days ago, which said, here's what's probably going to happen. And now we're seeing this play out in real time with coming from the horse's mouth yesterday, Jerome Powell himself saying, look we're in a real precarious situation. We're going to have to keep cutting, but we have to play catch up because inflation is going to take off. Okay, so I mean, for the have-nots, it's probably going to get even tougher for them. Okay, because prices are going to keep going up. Okay, for those that have assets, their net worth is probably going to keep increasing. All right. Hope you guys enjoyed the content. I will talk to you all soon. Bye.